Good morning, everybody. My name is Ken Burke, and I'm chair of the Course SME community. For any of you who don't know me, my own background is in business banking, and I was head of business banking for AIB, Ireland's largest bank, and CEO of their mortgage bank. And I've been chair of this community for quite some time. I also work as a senior advisor for Course. You're all very welcome, and we have a great session lined up this morning. So good morning or good afternoon, depending on where you're dialing in from, because I know we've from people across the globe. Let me just give you a sense of our running order today. I'm going to speak to an introduction which kind of gives some context setting to our topic this morning, maybe take 10 or 15 minutes. Then I'm going to hand over to Susan Davies, head of business banking with Santander in the UK, who has some great case studies and experiences to share. Zubair Ahmed from Very Park, our partners Very Park, will join us at that stage, and we're going to spend some time going through a very exciting report that we launched at the half year on the 5 stages of SME digital transformation. And we're going to take another case study. Lucas is going to join us and go through that, and then we'll move into a panel discussion. So plenty of opportunity to digest the content, and please feel free to engage in chat and Q&A, and we'll make sure that we try and cover all your questions as we run through. We're probably going to finish around, I'm going to say 10 past 11, quarter past 11 European Standard Time. Okay, if we could kick off, David, if you wouldn't mind putting up our first slide. You know, our topic today is elevating SME banking beyond boundaries, and it's about, you know, positioning value-added services and personalization for SMEs. And purely by coincidence, I was opening my post yesterday, and I was doing a bit of prep for the session this morning, and I opened my post yesterday, and there were 3 letters in it from the one bank to me. I won't say which bank it is, but I have a banking relationship there where I have a dedicated relationship manager. So this bank saw fit to write to me 3 times to tell me that they were increasing their charges. So I have a number of different accounts, but they wrote to me on each account to tell me that I was getting such fantastic service with my relationship manager that they saw fit to double their charges on each account. But I got a separate letter from each account. Now, this is my personalized relationship banker writing to me, and he wrote to me as "Dear Customer." And I just said to myself, God, that's not great, is it? So, you know, if that is some bank's best attempt at personalization in its most basic form in communications or engagements, it's not wonderful. There is a fantastic opportunity here to really serve SMEs better with value-added services and personalization. We're going to get into that today. David, next slide, please. So maybe just to spend a little bit of time looking at the strategic case for fundamental change. You know, if we look at some of the challenges and changes around the banking industry, you know, we have gone through a really turbulent time with poor customer experience and conduct issues and trust issues as we walk through the financial crisis in general, and some particular crises in different countries where customers have not been served well by their banks. So that whole piece around customer engagement, you know, disintermediation, the elimination of steps in the supply chain, commoditization, you know, that blurring of products, really bringing price considerations to the fore beyond necessarily service. And then that perennial profitability and cost to serve issue that all banks and financial institutions face, with kind of legacy cost bases around expensive branch networks and systems and relationship managers and people costs. And then ever-present regulation, which is a necessary burden on the business. And then really front of mind that existential challenge around you know, the environment and ESG and how we're positioned to respond to those really once in a lifetime chances and opportunities. And then when you overlay new sets of customer behaviors, really accelerated mobile and tech usage, and you say usage, well, it's embedded in every facet of our very living. Social media and where that has gone as a means of engagement and a means of communication and people living their lives. An absolute demand for personalization. The little story I told at the start. People expect their banks to know them well. Don't have to tell me my story. You don't have to tell me my own story. I shouldn't have to tell it to you. You should know me by the data and the information that you have. Channel blending, and we used to call it omni-channel, but customers just presuming that all the channels work in tandem, that they're mutually complementary. And then I suppose changing demographics, and they're changing a customer pool and how that customer pool will engage with us. So, when you overlay all of those challenges and changes and new behaviors, a really differentiated approach is needed to respond to that rapidly changing and evolving market and operating system. David, the next slide, please. So this is a busy slide, but just to give some context, in course, we've identified 5 key global trends that we think present a really significant opportunity for SME banking transformation. And there's the 6th one mentioned there as well, which we added on in terms of monetizing the gig economy and recognizing that in a post-COVID era, people's ways of working have changed, and there's a need to serve a new pool of customers in a different way. But I'm not going to drain this slide slavishly, but just to say, we've been working through all of these key trends in a very structured way this year, and our commitment is that there is more to come, and we will deal with all of those key trends as we go through the end of 2023. So we're talking about digital acquisition and onboarding, dedicated mobile first SME banking and really proper functioning SME apps, embedded finance, and we've had some great sessions talking about the opportunity to disrupt and disintermediation and increase revenue, and that ESG business potential for SMEs. But the one we're going to speak to today is number 3, beyond banking systems, our banking services and ecosystems. And we're talking about the whole business of marketplaces, trade support, advisory services, add-on services, HR management services, accounting packages. The opportunities for partnerships are key, but there are some huge considerations around how banks attack this, how you go about it. Do you do it on your own? Do you do it in partnership? I'm going to speak to that a little bit briefly. And I mentioned earlier Susan joining us, and Susan is going to bring us through Santander's very exciting breakthrough case study in SME supports and development that make them a global award-winning leader in serving SMEs. And as I say, Zuber will join us also and bring us through that comprehensive study detailing the 5 maturity stages of SME banking and that journey from digital transformation to disruption. So a little bit of research that we've done, David, if you could move to the next slide, please. We first of all, we piggybacked on some research that ING did, and I thought I saw Jack on the call earlier on. But ING did a series of customer research, and you can see there, they were estimating conversion from new categories by online experience. So a little bit of market research and focus research with customers to say, well, if we were to do this, what's your predisposition for taking up these type of services? And you can see that there, legal advice 21%, car leasing 52%, printing services, telco, website creation, web shop development. So quite an extensive piece of research trying to understand with SMEs what things may they perceive to be really value-added services. And when you overlay that with some recent global research with Accenture, who found that SMEs are feeling neglected by banks. So this is the burning case. SMEs are feeling neglected by banks, with nearly half of them, nearly 47% of them believing that banks don't understand their challenges, and that only a small fraction, 9%, feeling that their needs are fully met. So what I'd say is, to gain a competitive advantage, banks must align their offerings with the life cycle of SMEs and deliver personalized and value-added solutions that not only meet, but actually surpass SMEs' expectations. And this requires quite a shift from, I suppose, the old product or proposition siloed centric to a client-centric approach, and prioritize speed to market as much as the quality of the services provided. And we're seeing that global leaders embrace external solutions, personalize services, and they build ecosystems that go beyond banking. And that requires adaptation, it requires agility, it requires customer centricity. And these are really crucial for banks to thrive in the changing financial landscape. And it actually turns on its head our traditional approach to segmentation and that kind of monetary approach that we might have looked at in understanding our customer base. 0 to 100k gets this in borrowing requirement, up to 500k gets that. People borrowing above $1 million gets this. Looking at where SMEs are in their actual life cycle, in that growth phase, in that development phase, in that maturity stage. So that's a really natural complement to the work that we have done with Verypark in understanding the 5 stages of how banks get themselves ready to transform themselves from previous kind of legacy practices. So, David, the next slide, please. Let's look at some key principles for success. Understanding your customer needs and deciding for priority services. So these are big decisions, and Susan's going to spend some time, and we'll spend some time in the panel talking about that. Try to look for the right partner. If you choose a partner, it's got to be the right partner before investing in-house. Maybe you're just not good enough, or maybe it's going to take you too long to build that in-house capability. So what's the compelling argument for doing it yourself versus bringing a partner on board? And choose that partner wisely and divide roles precisely in acquisition, service model, and cross-sell opportunities. And look to expand your offering across the whole priority vertical ecosystem. And decide for, this is really important, decide for a strategic role in an ecosystem. And be very clear on what your bank or institution's role is. So, I've categorized it here as participate, orchestrate, or build. So take the first one, participate. So banks can provide financial services to at-scale competitors that are building ecosystems from bases in other industries. So this is, I suppose, the basic strategy can bring in revenue by reaping spillover benefits as banks add new customers from other business systems. But I suppose this role grants the lowest financial opportunity. It helps banks monetize their product portfolios with minimal investment, but you've got to share that, and you've got to share that dividend. And I suppose a typical example, if I was to pick one, would be GoBank in the United States, a company that teamed up with Uber to offer certain banking services to entrepreneurs on that ride-sharing platform. And in that setup, the bank gained access to a really vast customer base, while Uber, the platform operator, earned revenue from connecting the partners. But it was very much, it was a profit share. The middle one I describe as orchestrate. So banks can become the primary integrators of partnerships and reduce the scale of investment and complexity of execution. I suppose in this case, the bank becomes the primary and ideally the only provider of financial services. So a good example of that is Idea Bank in Poland, a company founded in 2015, and we've had plenty of exposure to them with Chorus. And they provide end-to-end financial and business support for SMEs and startups, but it's through a cloud-based platform. So the beyond banking services offered by Idea Bank include concierge support in dealing with state services, accounting services through a subsidiary company, cash flow analytical tools, and promotion support. And as part of that ecosystem, the bank launched a bookkeeping application offering lower costs and higher security than rival services. The last one, and this is, we'll call this full metal jacket. This is the build. And banks can build new businesses within and across ecosystems. And I suppose this provides the most significant financial and non-financial benefits. However, it's definitely the hardest to pull off. So OTP Bank in Central and Eastern Europe launched a state-of-the-art solution called eBiz, which is essentially an online financial management tool for SMEs. In Canada, Royal Bank of Canada introduced a cutting-edge end-to-end online platform called Owner, which offers a comprehensive set of services that assist in setting up and managing businesses in Canada. And Lucas is kindly going to bring us through that case study and some insights in that one particularly later that I think you'll find interesting. But when you're building an ecosystem, I think that partnerships are an important component of all three roles, whether it be participate, orchestrate or build. But for banks that choose to compete with a beyond banking ecosystem, partnership is only the first step. Orchestrating or building a successful ecosystem platform, it really requires banks to rethink their value proposition and continually iterate that and develop an operating model that's different from their traditional business. And in chatting to Susan, I know that that's something that they've really worked hard to do in Santander. And it's not a one and done. You've really got to keep working at this. If you're building an ecosystem, you've got to focus on those biggest challenges. And they're not your challenges, they're the customer's challenges. Start with your minimum viable product and scale rapidly. Make key IT design choices early. Think early about monetization, subscription fees and commissions, and you may decide that you're going to absorb that this is a value-added service that is included in your bundled pricing, and that it's transparent in that it's invisible, in that it is provided as part of the costs of the fees, or you may decide that it's separately priced. Think about your data for better decisioning and for data monetization and how you bring that data to your customers. And think about building a separate digital organization rather than trying to hang it out of an existing legacy system that might be very costly. I'm going to give you my own kind of experiences later on in the panel discussion, because in AIB Bank, we did do this as well. So I think we'll have a good panel discussion later on. So in conclusion, I think what I'd say is there's a real opportunity for banks and financial services firms to stay ahead of really rapidly growing competition. But to do this, you've got to disrupt yourselves. Before you can disrupt anybody else, you've got to disrupt yourselves internally. And you've got to provide support for SMEs through a seamless digital experience and delivery of the basics: opening accounts, timely access to credits, dealing with money laundering, AML, all of those really clunky things that we have to, those challenges. And banks can also drive new revenue streams by addressing changing needs of SMEs. And this can be achieved by transforming their own business models, embracing digital ecosystems, optimizing relationship management and really looking at your relationship management models, looking at the opportunity of embedded finance, internalizing and understanding the 5 stages and the 5 maturity levels of SME banking, and building actionable roadmaps. They're the critical steps in that journey. So hopefully that's a good intro, and no pressure, Susan. That's a good tee up to hand over to Susan, who's going to walk through Santander's winning SME strategy. And thanks a million, Susan, for joining us this morning.
Oh, thank you, Ken. That was fantastic. There's some great takeaways there, wasn't there? And you shared your personal story about that probably non-personalised approach by the bank, kind of set the scene there. And I think that's where we've got a real dichotomy at the moment. Whilst we want the simple things, the basics done really well, don't we? We also want that feeling of personalisation. We want that feeling that something is tailored and support is available just for me. So I think that really is what we're all grappling with. So good morning, everyone. I'm Susan Davis. I'm head of Santander Business Banking. It is a real pleasure to be with you this morning. I've also got my colleague Lynn joining me, which is a pleasure because Lynn is really at the cutting edge of what we do in Breakthrough and is the engine room of a lot of the content that I'm going to share with you today. And what I would say is, by no means is this perfect. You know, we've learned an enormous amount over the years. We've tried, we've tested, we've put to one side lots of things that we once did, because quite frankly, businesses have changed, consumers have changed, the world has changed, and we've had to adapt and evolve with them. And that is continual. That's not going to stop. But we have learned quite a few things along the way that I'd really love to share with you. It's definitely rooted in this idea of building strong partnerships. And it definitely starts with getting a good insight of your customers, understanding what customers want. And that takes time. You have to do the research, you have to follow the insight, and because it changes, it does, and not to make an assumption as well. I think that's how that we can trip ourselves up on. So the purpose is really just to give you a bit of an insight into some of the things that we found that have worked, and also some of the things that we're really a bit thoughtful and maybe looking to change. So David, can we go on to the first slide, please? So this is a snapshot of what we call our Beyond Banking Hub, and really it is a collection of partnerships, established partnerships that we now have. We work with exclusively. I mean, they do work with other banks, of course, but we have exclusive partnerships to really understand what the proposition is that we're offering our customers. And these are, you could argue, the basics, the foundations. Certainly a business setting up, starting out, would really want to or need to put in place. So it's about payments, it's certainly about ensuring key assets in the business or services, and also providing HR support as well. We found, certainly through research over the years, that what businesses were missing was that helping hand. Small, micros, SMEs, they don't have the benefit of a large in-house function of HR or finance or whatever it may be, but typically HR being the most prominent one. And what we found, that even though they're a small business, if they have an issue, that can cost them thousands and thousands of pounds. So when we've looked at the partnerships that we've built, we've very much focused on what's the need of smaller business in particular, but actually businesses that have that growth opportunity and want to scale as well. So tackling it from all angles. So starting with what we would call the basics, the foundations, the things that businesses typically would need to put in place as they set themselves up. David, what would you like to move on to the next one? Thank you. So this is a new proposition, new partnership that we've launched this year. It's with a company called Bionic. Bionic are exclusive to the SME market. They're quite unique in what they're doing at this moment in time. They are providing resources for businesses to find the best deals on utilities, telecommunications, and it is a way that they can build that connection but build confidence with the customer, that the customer doesn't need to go out and do all that research. They'll go and source that information. So it's a little bit, if you think about a money supermarket for energy, utilities, telecommunications. So we've launched this partnership a couple of months ago. It really has landed positively with our customers. The pickup's been fantastic. Understandably, to the backdrop of the economic climate that we're seeing right across the globe, this is incredibly topical. It is on businesses' minds. How do I create some payment certainty? How do I, support, improve my cash flow? This is a way, tangible way that we're able to do this. And it's exciting. It's something that we can talk to customers about because typically what we're finding, this is what's on their minds right now. How can I keep my costs down? What's a practical way of doing it? So, we've got some great case studies emerging. There was one just recently. It was a lovely little Cotswolds bakery, thriving little business, bakery business. And we've managed through Bionic to secure a 5-year deal, saving them something around £900. Now, for a small business, that's a lot of money, to create that certainty of costs, energy costs for the next 5 years is fantastic. So we're building this idea of a marketplace. We're building this idea of bringing together the basics of support, the added value that businesses typically would be looking for. That means that they don't have to go and do that themselves, so they can be pointed in the right direction. An area that we are developing that needs to improve is that customer journey, is the experience that the customer has when they then want that referral from us to the third or to the partnership that we're working with. So that's an area of improvement. Ken touched on it. It's about getting those basics done well. We can't have a great offering and then have a lot of friction in the process. So we recognise, you know, embedding that into an app is the ideal to give the customer that flexibility. And then we can, you know, market and provide the information easily and the referral quickly. David, would you like to move on? I think you need to skip the next one and then on to the next slide. Fantastic. Now, this is something that's incredibly familiar to us is breakthrough business support. We've had breakthrough in existence for over 10 years. It's been hugely successful. It's underpinned a lot what we've done in terms of non-financial support. We've been through several evolutions in its time. I mean, it started off really as a growth capital vehicle, very successfully still operates today in our corporate bank, but we've evolved it over the years, still with the same principles of helping a business at all stages of growth. I mean, that's, you know, that's the overall idea here, that a business sets up, starts up, what support do they need, and we help them through that evolution. But what we've recognised and understood over time is the challenges that businesses face have changed, and the way in which they want to access information has changed, and support and resources need to adapt and evolve as well. Probably the most notable change, of course, was during the pandemic. I mean, typically before, we used to run a lot of in-house events. We would bring businesses to local branches or, you know, big sites. And of course that changed completely. We had to move virtually. We had to really think about accessibility to content, and we had to respond quickly. And we did, and we were, you know, we were well recognised for what we did through the pandemic period, focusing on that survival and then getting them back and reviving their businesses sort of post that time. But this is something that now, when we look at it, there is a need to refine it even further. We understand that businesses want information and support tools and content, but actually when we look at what we offer, sometimes it can be quite a crowded picture. It can be quite crowded in terms of the information that's there. Therefore, businesses maybe struggle to access exactly the information that they want or they think that might be useful. So we're listening, we've done some market research and insight, and certainly some of the things that come through loud and clear is growing your business is popular, improving credit scores, improving cash flow, and business growth are all areas that seem to be of big interest. Now, that might be driven by economic challenges at the moment, or what we find certainly in the UK, there is certainly still that entrepreneurial spirit, and there still is that desire to set up businesses, albeit you still see statistically between 35 and 40% survive and the rest don't. So this is an area that we continue to want to develop and continue to want to improve. But we're very proud of what it brings businesses, because when you get underneath the surface of the content that's available, there's some really interesting, valuable tools there that can make a difference. David, would you like to move to the next slide? So just building on that a bit further, these are three areas in particular that we feel really tap into those stages of growth. So business, once they get past the startup and we've put the basics in place, given them the support that they might need when they're first starting out, then as they begin to adapt and evolve, there's new challenges, there's new opportunities, and they begin to understand where the value may come from if they had additional support. So there's probably three in particular, one being coaching. I know there's a plethora of support in the market for coaching out in the market, of course. There's so much available, and that can be daunting for businesses. But we've partnered with Action Coach for a number of years now, and what we've found is they're really sort of practical approach to coaching and support has been valuable. They do tailored one-on-one, they do team sessions, they do them virtually, they do them face-to-face, depending on what the client need is. They do masterclasses, but it really does give a business or a business owner that opportunity to invest in themselves or indeed the business. So the benefits are well documented about what coaching brings, but it's about investing and taking that time. So the partnership with Action Coach is very valuable, and we've actually used them in-house too, because of the support they can provide. The next stage is very much about growth and thinking about what are the components of growth? What are the things that the real fundamentals that a business needs to consider? And that could be, access to government support and schemes. Again, plethora of information in the market, but quite often what we find from customers, they just don't know what they don't know, and then they don't know where to go to find that information and useful resources. So that's certainly something that we're providing signposting to. Increasingly, businesses need to adopt better digital skills. They need to understand not just how to set up the website, they need to understand data, and now evolving with AI as well. So improving those digital skills, even for the smallest micro business, a website and an online presence is pretty much a given that they need to do. And then we've got some additional resources for businesses that are probably a bit more established, perhaps with growth ambitions, potentially with international trading ambitions as well. So looking at growth management, how to grow their businesses, and leadership training that's delivered that we've got through business schools across the UK. So that's once a business has really got to grips with their plan, their strategy. And that's an important point that we really want to help businesses now with, is not trying to throw everything at them and asking them to navigate this themselves, but making it easier once they've identified at the different stages of growth. And the last one is thinking about if it is a business looking to expand beyond the UK, how do they do that? And we've worked in conjunction with our corporate colleagues who have developed a navigator tool, Santander Navigator. You may have seen it if you've been on the website. And that is something that is beginning to help businesses navigate what is quite a complex trading environment, particularly post-Brexit for us. For many businesses, we found that they just need that additional support. So these are the ways in which we're growing, supporting and helping to grow, helping a business to grow at various stages. David, if you'd like to move on, that'd be fantastic. So we're going to move through into breakthrough support. And this is looking at a variety of topics that we've found when we've done some website research that businesses are really going in and looking at. So this is through the website analysis and data that's coming through. And it is a variety of topics, as you can see there, certainly underpinned by a lot of focus on growth, a lot around managing debt, how do I improve my credit score, how do I improve my cash flow. So it really does illustrate what is on businesses' minds right now, and it's how do we look at this in a way to maybe present and package in a more user-friendly and accessible way, because whilst they are maybe going on and tapping into this content and insight, we aren't necessarily then doing something proactively with it. So that's an area mentioned where we need to develop and evolve, and this is one in particular. Lynn, if you don't mind, I'm going to bring you in. Is there anything you would add here? Because you've done an awful lot of work, in particular in this content.
Yeah, thanks, Susan. Hi, everyone. I think I think the key thing around the content is how we find those subject matter experts to help us land the support in the right way. I think we've recognised that we're not the subject matter experts in a lot of this stuff. You'd think we would be, but actually when it comes to things like, you know, looking at how you keep your cash flow positive, there is some fantastic support available to businesses, but they simply don't know it exists. And I think sometimes you made the point earlier, Susan, of business owners don't always know what they don't know. And I think we have to find a balance when we're either looking at collaboration or we're developing content or we're developing programs, that we're striking that balance between what a business is telling us they need, but also what we know they need to enable them to grow, if that makes sense. So sometimes there's a little bit of responding to, oh, we need help with cash flow, we need help with growth, we need help with international. But sometimes there's also our insight as to the things that we know a business owner will respond to and benefit from. And trying to get that balance can be difficult because, you know, we can sometimes feel like we're overwhelming a business owner with information, but actually it's driven from a place of, we know this is the type of support that will fundamentally make a difference. And there's lots of research that shows that businesses who seek advice and support will grow and will be more sustainable as a result of that. So I think a lot of the time, Susan, it's very much, yeah, looking at those topics, looking at where those subject matter experts are, and then I guess layering it into that kind of what's the next level of information that a business owner will need, whether they realise that or not. If that makes sense.
It does. Thank you, Lynn. That's helpful. So, David, if we move on to the next slide, thank you. Perfect. So something that's been hugely successful for us is understanding particular segments in the SME communities, and supporting female entrepreneurs has been at the forefront of our focus for a number of years now. The programme that we've been running, the Breakthrough Women's Mentoring Programme, it's its 5th year this year. Hugely successful programme, has received a lot of external recognition, and I think what really makes this particularly successful is the way in which we bring female entrepreneurs together with established business owners, and that mentoring-mentee partnership. And over the years, I mean, we've had to evolve and develop this because first and foremostly, it was a face-to-face program that we had to take online very quickly. But interestingly, that changed the dynamics for the better, because historically, when we first set out with this program, it was incredibly London-centric, and therefore it kind of dominated the types of businesses and support that we were able to provide, whereas now it's a national program and accessible to female entrepreneurs across the country. What makes it successful is, I guess, that elixir of bringing the two together, but also the range of support that's provided throughout the 9-month programme, and the commitment that's expected from participants. I think that's the key. You know, any programme that any business signs up for needs to really consider that investment. Could be financial investment. We don't charge for this moment, but it is certainly a time investment that we really do expect from attendees. But it is, you know, it is a way of really supporting what has been a fairly underrepresented group. You know, statistically, female entrepreneurs are less likely to receive seed funding to their male counterparts. What we found through this programme is there is a confidence issue for many females that isn't maybe present with men, that we need really to focus and harness and develop. And the feedback has been phenomenal. I mean, when we wrap these programmes up each October, it is really inspiring and motivating to see the journey that we've taken female business owners on. So this is something that we're incredibly proud of, because we see it as a real catalyst to help into a marketplace that can at times be quite daunting. And if you look again, or I was mentioning earlier, statistically about the number of business failures, when you start to boil down the reasons of failure, quite often it's what's cited as some of the challenges that are faced early on and more prominent in particular with female business owners. So our 5th year, we're very, very proud of that, and something that we will continue as it goes from strength to strength. And if it is something that you are considering about running programs, I would highly recommend, but I would certainly recommend doing it in the virtual
Susan, you are muted.
I do apologize. I have no idea how I did that. That must have been by magic. So moving on, David, if you can go on to the next one. So just sort of building or extending further into that support for female entrepreneurs, we have been working with a number of Black female founders for many years now. In fact, we launched research probably 6-7 years ago that really did amplify the challenge not only that female entrepreneurs have, but in particular Black female business owners. And we wanted to understand the challenges specifically faced by this group. And in order to do that, we needed to get really up close and personal with the sort of scenarios that they would face into, and some of the challenges that maybe were quite unique that we weren't aware of. And these are not exhaustive, these are not unique to Black female entrepreneurs, but they certainly are hinders, things that hinder and things that get in the way. So we've developed a Desert Financial Readiness Programme, which really helps with financial readiness, getting your business set up, what you need to consider from the start, and really strengthening those business ideas. Again, building on that confidence, but more importantly, just the practical steps that you need to consider and recognising maybe some of the unique challenges faced. So again, something we're very proud of, something that we see plays a part in strengthening the capability in the entrepreneur community in the UK, and certainly sort of is a really good complement to what we're doing on the mentoring side as well. So just really wrapping up and thinking about what's next. As I mentioned at the start, we've learned an awful lot through the evolution of the Breakthrough Programme. Increasingly, what we've found in recent years, well, businesses want the basics done quickly, simply, easily, without fuss, ideally digitally. What they are asking for, and the research and the insights definitely telling us that, they want support that's tailored for their needs. They're looking for that personalisation. And whether we serve that through data and analytics and AI models, quite possibly, increasingly what we've found is the addition of a human into the equation is something that is well received. Now, you've got to really think about that in your cost to serve models. You've really got to think about that, particularly when you're serving that micro end of the market. But how you combine the two could really create something quite powerful. And that's probably changed, I would say, even in the last 2 or 3 years. I mean, 3-4 years ago, the talk was all about digital and everything was going to be fully automated and there wasn't going to be a role for humans, full stop, it felt like, in banking. And of course, we've seen quite a banking evolution and change to physical presence. But increasingly for this population, what we found through the research is getting that great combination of digital first, absolutely, but with a human touch, which I'm taking straight from our vision statements in Santander, but I think it resonates across the whole market. So something for you all to consider, and I'd love to hear your stories of how you're combining or not, as the case may be. So thank you for the opportunity to walk through, for me to walk through. Just to the very final slide, David, if you want to go to that. Our next steps, and I'm interested once we get to the panel session, we're beginning to explore this idea of toolkits again. We'll come back round to this idea about how do we look at it at different stages of growth? How do we make it easier for businesses to access the right information at the right time? So we are exploring that idea of toolkits. So I'd really value some thoughts on that as we go forward into the future. Thank you.
Susan and Lynn, thank you very much. That's been really insightful, and you've covered a lot of ground in the last 15 or 20 minutes. And congratulations and well done on all you've achieved in Santander. And yes, we're going to pick up on some of those themes when we get into the panel discussion. But next, I'm going to hand over to Zubair Ahmed, who's Managing Director for Very Park. And we've been working very closely together over the last number of months. And some of you may be aware of the report and the 5 stages of transformation report that we launched in Milan at our course conference. And Zubair kindly said that he would join us this morning, and just to pick out some particular extracts from the report as it speaks to that whole piece around personalization and where that sits in with those 5 stages of transformation, and some insights from Very Park's work in this area. So Zubair, thanks for joining us, and over to you.
Sure, thank you very much, Ken. Nice to see you all. And extremely informative Santander presentation. Thank you for that. So as you recall, just down the memory lane, a few months ago, we kind of unveiled the work that we have been working with, Very Park and Chorus together, along with a sizable SME community, with the idea of creating something by the community for the community, to challenge the a notion or a hypothesis at the time that the SME segment is underserved globally. Reason being that banks are more focused on corporate, which brings the money, and retail, which brings the masses. SME segment is not getting the due attention in terms of unique value propositions, customer experience, onboarding and servicing models. And the report was launched on the 14th of June in Milan, as Ken mentioned. And ever since then, we've been extremely busy in gathering some really practical, pragmatic feedback and reaction from the ground. It also created a lot of conversations around which parts of the report are really practical and also top of mind for some of the banks that we had not spoken to when we were working on the report. So we started helping them with visualizing what would be their aspiration in terms of improvement. And we've also come across some really nice use cases where people have started applying it already. So that's extremely exciting. If you go forward, I just would like to focus on, in the context of today's discussion, on the value prop, which happens to be, if you recall, the report is structured on 5 levels of maturity. And we started thinking that where you are at and where you want to be, you need a yardstick as a bank to rate yourself for your own self-awareness and realization, and then create those conversations within the bank to establish an aspiration that you chase. But then we very quickly realized that it's not a linear equation, right? It's not an entire SME segment as one. You might be doing good in some areas, but really struggling in others without knowing it. You might have influence on some areas as a head of SME business, like value prop. You might have a lot of influence in that, but you might not have a lot of influence on other enterprise parameters like risk management and data management. So we created 6 dimensions And for each of those dimensions, we requested the banks to consider rating themselves from a self-assessment perspective across the 5 levels. Each of the levels describe in full for each of the dimensions as to what the practices are. I'll cover the value proposition in my brief discussion with you today. So at level 1, so these are the banks who are operating, servicing their SME segment. At level 1, we call them ad hoc and manual. They are largely driven by previous experiences of the bank competing in spaces where they may not be there, or they are there by the virtue of their past relationships. They are more product-centric, so they are thinking of liabilities, products, asset products first before they understand the total composition of the customer, the environment that they do their business in, and what are their actual needs of the future. They are also having a limited product offering, so just a niche 2-3 products. Manually driven operational inefficiencies do not allow them to really expand on that front, and their IT investment is extremely low as well. So you don't see value because you also don't invest in that creation of value to start with. So it's a chicken and egg. At level 2, we see some digital patchwork starts happening. So this is where we've started seeing that SMEs are being onboarded in glass-like environments, though at the back there's an army of people to process the eventual paperwork that digital converts into paper internally into the organization. But on the outlook, it looks good. But they still have this one-size-fits-all kind of a product view. Level 2 banks are still yet not really using the advantages of subsegments of SME, because SME space is extremely broad. And with new subsegments coming to light, like gig economy, these banks are really behind in terms of their thinking as to how to get there. And they also have time-consuming processes, so inefficiencies continue at level 2, but they have a little bit of digital tools come to play to ease the pain of the segment that they serve. And then there are banks, and one would argue that many of them fall in level 3, where they have a digital-first mindset. They come from a thinking that in order to operate in an SME segment, they need to be highly digital to justify the costs and increase their customer base. So we call this an advanced phase of SME banking because these systems are now in place. They are also integrating each other very well. Clients are not asked to deliver documents that they've given earlier again and again. And they've started combining financial products with value-added services, right? So they have a bouquet composition of products coming in. SMEs have started seeing advantages that if I do so many transactions, then I get so much free. So value proposition is now becoming a little bit more conducive to the business that the SMEs exist in. They also create a 360-degree view of products across the channels of SMEs that they do. Subsegments have started at level 3. They have now ability to understand that not all SMEs have to be served in the same fashion. They rely on internal skills still with product ambassadors and cross-sell targets and a sales force that really runs the revenue tills for the bank. And then you move to level 4, where the real advantages of digital come to being. And at level 4, the banks do not see a differentiation between the SME business and the digital or the IT effort. It all culminates into a single business, which is powered by technology. And it opens up an era which we call the self-service era. So the self-service era starts by the bank putting themselves in the shoes of the SME and thinking that how the SME is going to go through the journeys of onboarding, of servicing themselves. And they create those tools, whether it be a mobile app or a SME portal and so forth. But they also replicate the same kind of services journeys for their internal staff to serve the SME. So SME doesn't see a difference in self-service versus assisted service by the bank staff. So there's a lot of synergy there. In this state, from a value proposition perspective, the bank has thought through the life cycle of the SME, how they have grown over the years, where they are going next in terms of geographical expansion or the regional expansion. So they are able to cultivate the same product into multiple layers, and these layers, like an onion, peel off and open up to provide yet more value on the same product to the SME as the SME grows. They have personalized solutions meeting SMEs' unique needs. They start looking at giggers, for instance, as a new segment that is coming about, trying to understand as to what would be their ask, who's the company behind them, because they themselves are the company, and then who's the person behind them, because they are also a personal retail customer of theirs. So they have started differentiating those. Highly digital, very well integrated, and they've at the start of using the open banking and the AI technology elements that are now available to them. So these banks are at level 4. And level 5, we feel that these banks have really mastered their attention and possibly created a segment of one. So every SME feels that if they are the only client for these kind of customers. And the reason why that happens is because they really embed their solutions into the open banking space. They get the data with customer consent from sources that are available from a regulatory perspective, make their decisions based on algorithms, based on the trend analysis of the past, the patterns of the past, the forecasting and predictive nature of the future. So it's a much more intuitive. And they use embedded finance to the highest degree. And we have seen some examples where SMEs are being onboarded through completely third-party ecosystems rather than bank running its own workforce to acquire in traditional methods. I've recently come across one of our clients in the European region has done something really remarkable, and I wanted to mention that for sure, in my view, they're touching the borders of level 5. And what they've done is they've created an ecosystem, not of their value proposition is to run the SME business rather than to service a business that is running a business, right? So they've created essential elements of functionality that an SME needs. SME needs help in cash flow management. They usually don't have CFOs and CMOs hired within their environment, so they always lack knowledge of really good tools to manage their business. They sometimes don't have the funding to really hire the top-notch talent at the highest level. So this bank has created a set of apps that they give to SMEs, and thousands of them that they have nurtured over the years to manage their business well. So this is such a tremendous amount of hook into the SME business. And then they are turning around and opening up this SME base that they have created over the years to other fintechs who are coming in and bringing in nifty, unique, specific solutions that will ease their lives, such as supply chain management, such as the customer communication, the marketing campaigns, and so forth. So this is the advancement that we see coming about, and right now, in my personal view, there's a lot to be done from a value proposition perspective. We also see there's a geographical divide in terms of what is available and what is being used and offered. There are countries where SMEs do not expect that value to come in, so they are okay with what is being delivered, as opposed to in other places where SMEs are willing to change banks, and then hence creating this competition and pressure on banks to succeed in terms of their maturity. So I'll take a break here. If there's any question, I would be more than happy to answer, Ken.
Super, thanks. Thank you very much. That's a great linkage in terms of our topic today around, where beyond banking services and ecosystems, and that linkage to that great work that we did in the Very Park report. Lucas kindly said that he would share the Royal Bank of Canada case study, which kind of gives another bit of colour in terms of some good work that's been done by Royal Bank of Canada. Lucas, will you walk us through it, please?
I can. Thank you so much, Ken. Obviously, just to build on what Zubair was just presenting, I think, the piece of report that we put together can really help many of the organizations to have a look at themselves, try to look, in the mirror, where do they stand and how to develop their value proposition, but not just value proposition, but the overall banking experience they offer to SMEs. We have identified a couple of the case studies even in the report, and one of them was mentioned, in value proposition from Royal Bank of Canada. But I would like to highlight here that for this session, especially, we wanted to have a couple of world-leading players who, unfortunately, beginning of September didn't work for them. Whether it is, Commonwealth Bank of Australia, Union Bank of Philippines, just to mention some of them, Millennium BCP, Akbank Turkey, Mashrek UAE or Akbank UAE, and some of these institutions you will experience, in the upcoming period of time that we'll have in Dubai, a physical conference. So out of many, I picked Royal Bank of Canada because, what I believe is the value proposition that they created is a wonderful piece of work that consists, as you see, of 100% of the services that they divided on only 30% serving the real financial needs of SMEs. And I think, this is a significant move forward and already a signal that serving SMEs is not anymore what it used to be in the past, because 70% of the services that RBC offered includes services beyond banking, whether it is accounting services, as already Ken mentioned, through institution called Owner, whether it is free integrated invoicing and accounting via online banking, which they have already inside that, whether it is some of the other ventures that they recently started or their own companies or collaboration with institutions like WeWork. We mentioned that, and Ken mentioned it among number of the gig economy monetization trend that we see for the future, because WeWork service for many of the freelancers is especially these days very demanding. Or it could be a couple of the other examples as Promote, which is helping SMEs to go online, to go digital, to establish their own website, to establish their own web shop, and different other opportunities that have been created online. I'm not going here in details because, similar case studies was mentioned by Mashrek last year. I remember that we had two wonderful speakers as well, mentioning how they have built the beyond banking offerings themselves with different partnerships, and how they are, able to be either part of the packages already embedded in the value proposition offered by the bank, or how some of them might be buy additionally, obviously, by certain discount based on the partnership that have been created. I think it's a plenty of opportunities that beyond banking can offer, and we really encourage you to have a look, at Koru's website, because most of those case studies are being mentioned directly in our SME banking community, and these individuals who have created and delivered those value proposition are well-established members and are happy to connect and to answer, any further questions in details. So Ken, back to you, because I believe, there might be some really interesting questions to spice up a bit, discussion. I saw that among participants, we have as well some great groups and institutions that were not able to join as speakers, but possibly, might ask or contribute from their own perspective. Thank you.
Lucas, thanks very much, and again, a very good linkage. So we're going to open them into the panel discussion, and I'm going to ask Lynn and Susan and Zubair and Lucas to join me, and maybe just to kick off, if I could, and I mentioned this in my own introduction, and this is not to be a sixth principle of knowing when to quit, but I do think it is important that in any business, and when you're serving SMEs and when you're driving banking SME business, that you've got to continue to iterate, and you've got to continue to develop, but you've also got to know when something isn't working or working as intended, and either refine it, remodel it, refocus it, or retire it. And when I worked in AIB Group in Ireland, we did a significant amount of customer research and focus groups, and we launched a customer service package called My Business Toolkit, and this is a package that is some other geographies, has been launched in other geographies as well, and this was 3 years in the planning and developing. It included 5 different packages. The first one was a computer backup package called Mozy Pro. The second one was an expense and receipt management tool for SMEs. The third one was a business plan creator. The fourth one was Sage 1, the accounting package. And the last one was a build your own website creator. So we were all really excited about this. It became award-winning. Everyone likes an award. It won the best technology partnership with a fintech at Financial Innovation Awards. But after 6 years promoting it, I had to pull the plug on it. And we just couldn't get critical mass adoption. And we did a kind of a lessons learned or root cause analysis to try and understand and you know, why didn't this work as intended? And two things I'd say is a fundamental mistake. We thought we could be a host ecosystem for SMEs. We thought that SMEs would come to our website as their default website when they turned on their PC every day or their laptop. And they just didn't see us like that. You know, they were happy to come. Now, at the time, we didn't have an SME app, a dedicated SME app. So we were driving traffic through website. So we were trying to recruit people through the website, and people saw the website as their access point for their online banking, but they didn't see it as a homepage or a landing page. That's the first thing. And the second thing is, I think we had a lot of debate around this. We priced this at a financial discount. So the likes of Sage 1 comes at a cost. And we went in at 60% of what the normal Sage 1 cost was. So we're saying, well, you're getting a really tangible benefit here. And we showed what the normal market price was, and we wrapped all these together, and there were different levels of packages. But people didn't feel comfortable paying their bank. They felt comfortable paying Sage or Xero or their accountant, but they didn't feel comfortable accessing this through their bank for whatever reason. And when we did more focus work groups afterwards, and people said we kind of felt we should get that for nothing, and we pay enough in bank charges and we pay enough in bank fees, and you know, when Susan and Lynn were walking through the case study, like, you know, we didn't retire everything we were doing, so that was just a dedicated bolt-on add-on package that came at a cost. So women in business, action coach we used, mentoring, targeted supports for startups, all of those things absolutely flew. But when we try to build, we call it an ecosystem, a monetized ecosystem, and the basis of our monetary model was to recoup the costs of the package, not to make money from it. It just didn't fly. So maybe just in taking that and parking that, Susan and Lynn, your own, because you're you know, some of the things that you're providing HR services and your dispute resolution services and HR services and introduction to Bionic. What were the discussions in Santander around monetizing this or otherwise, and what is the basis for your model? And Zubair, please feel free to contribute if you've thoughts of using it as well. Susan or Lynn?
Yeah, we've kind of thrown this about many times about monetizing and bringing in a fee structure, and up until now we've resisted that. I think we've really focused on how do we build loyalty with our customers, and we see this as a tangible way of doing that. And when I say loyalty, so we are then really attracting the primary relationship, and therefore if you attract the primary relationship, that's going to drive more value and fees and transactional income, and that then supports some of the value add services that we're offering. Having said that, and it's really interesting you say, Ken, that point about people don't want to pay their bank, but they're quite happy to pay another provider, because the dilemma that we've had is, are we creating a choice that people see that there's no value associated with a product or a service, therefore they're not interested in it. So it's almost like too good to be true. So if it had a fee, then the perception would be that there is some value associated with it. But from what you're saying, it's not so much that they disagree with that, it's who they're who they think should be receiving the fee for the product or for the service. So our model today is very much about driving that loyalty underpinned by the primary banking relationship. And now we have launched an app. We launched our business banking app a couple of months ago, which is long awaited. That will certainly start to be the foundational sort of basis that we can build more products and services and give us smoother access to customers. And again, we'll probably revisit this idea of monetizing, possibly, when we look at the overall offering that we're presenting. So maybe didn't quite.
Yeah, and I think maybe this is a consideration. It was a reflection on my own. At the time, we had a very traditional pricing model, which was a quarterly fee-based model, so a maintenance fee plus transaction fees. And I know many banks are now gone to subscription-type monthly models, and I think that puts banks more in the utility-type space, whereby
Definitely.
you're used to paying, like you pay for your mobile phone or your broadband or your television or whatever, and then you pick your package and you pick your add-ons and the additional services. Whereas running two parallel pricing modicums is probably not ideal. So, Zubair, your own views on monetizing, shall we say, personalized additional services and where that sits in that context.
Sure. My view is, Ken, it's always monetized. We need a perspective to see it. So when a bank offers value-added services to the SME, the bank does it, obviously, as Susan mentioned, for loyalty, for as a hook to go deeper. But the bank also does it to decrease the cost of risk on their front. So if I were to offer a cash flow management solution to an SME as a bank, I don't have to, but now I have a deeper insight on how the cash is flowing, and my risk of financing this SME over time goes down. And if I pay a low cost of risk, the idle money that I would put aside for non-performing loans, it now can be reported as my profit, right? So there is always a huge return that the bank has in giving these extended Royal Bank of Canada. 70% of their services are for non-financial needs. Fantastic example. But I think we need to look at from that perspective. There's always a little bit of a controversy in from the charges, fees, additional levels. You pay this, you get that. Then we commoditize the profession of banking. Telcos do that because that's, you pay as you go. It's not, we're not in the telco business from that perspective. So we, even though telcos have taught us how to do pricing and discounting and packaging of solutions like nobody else, but I don't think we should go that path with SMEs, which are smaller. As I said, lack of talent, lack of resources, pressures. We should look at it differently.
And Susan, Lynn, Zubair, the whole piece around partnerships and driving partnerships as part of this to success. Any key learnings in Susan, in terms of Ireland, how you drove this, your selection of partners, managing of those relationships, getting it to market in a way that was cohesive?
Well, the most recent example we have is Bionic, and that was born out of prioritisation of need by the customer. So through the insight, through the research, something that was really compelling around the need to help businesses with managing costs, I mean, in a nutshell, and really to get to the heart of what was the most prominent cost, what was the cost that they were most challenged with, and utilities, energy costs, telecommunications was certainly it. And I think there was almost like an opportunity came across our desks. The timing worked incredibly well. I mean, yes, you could argue Bionics hit the market at the right time because of those spiraling costs, but their approach to us really did coincide with things beginning to get quite challenging for SMEs. So the partnership just seemed the right time, the right moment to evolve, and we were able to develop that reasonably quickly. I say reasonably. It's always we always find that the phases and stages of procurement, internal procurement and governance never move as quickly as you want, but from initial discussion to actually launching, it was a relatively quick and seamless process, which is great for everyone really, because one is giving customers what they're wanting, and secondly, it really does strengthen that loyalty, that conversation, whether it's through direct conversation or marketing that you're having with the customer as well. So that's the most recent example that we have. I mean, we certainly in the past had partnerships that have had to evolve, that have had to change in terms of their tack, in terms of their focus with us. Certainly, that's been something, and probably the biggest area that needs to be improved is that customer experience, the customer journey. Really embedding it into our ecosystem, into our digital ecosystems, because the days of referrals and handoffs and callbacks and all of those things really it doesn't have a place now. Even for a less sophisticated person, they do expect to do things pretty quickly.
And have you a seamless pass through to Bionic via your own gateway? Yeah.
Not quite yet, and that's just a timing thing because of when we launched our new app. But that will be the path that we're going to go down. But it's not too bad as the referral model. But we're in a day one phase. There's a day two, and the day two will be into the app. That's right.
Thank you, Lucas. I'll bring you in now. I see you have your hand up.
Yeah,
very easy. You've had it up for ages, Lucas. Sorry.
No, I'm not an expert here. Yeah, so I'm trying just to share a couple of the examples that pops in my mind. When you mention especially subscription-based models, I know especially that TBC Bank Georgia has built a really successful growth in the market for with SMEs based on subscription-based model. They have right now different types of packages that you can order as an SME based on how many services you want to get. And it's on a monthly basis. Yeah, you decide how, when you want to do it. I think we had Tornike speaking about that. I think he mentioned that story during our transformation topic in May, if I'm not mistaken. The other one that pops in my mind is the other example is Mashrek. I mentioned that they were speaking actually last year on the story, and they have it pay as you go. Meaning that you don't pay, for any type of package there, but you simply have a dedicated partnership website where all the deals are being offered to the SMEs. And whenever they purchase, obviously, there is a stake, or there is a certain percentage that Mashrek is getting from the partners, not from the clients. As well, a good example of how the partnership can be built. And the third example that came to my mind is UOB Singapore, and I think this is the one where Antonio from Millennium BCP took quite a bit inspiration, is through their BSmart solution. And it's purely onboarding experience where, already inside your onboarding package, you have a couple of the partnerships mentioned and some of the services for free for the first, let's say, 3 or 4 months, just to experience them, to give them a try. And then, based on that, decide if you want to purchase them, have them in the package or not at all. So a couple of the examples, that come to my mind, and Millennium BCP especially, decided actually to have only the services that they can offer for free. So whether it is a catalog of consultants that can be offered, whether it is accounting services and accountants to be offered, and many of those that are bringing them already a value in terms of not financial, but beyond that. So data about the customers, insight that they can do the cross-sell, or further initiatives that they can build on. few examples just pop some in my mind that I believe would be good to speak to these people and ask them how this model works compared to the other ones.
Absolutely. Thanks, Lucas. And obviously, at course, we can facilitate those engagements if anybody. So get onto the community website and pop us a message, or myself and Lucas or Dorca an email, and we can set that up. Lynn, I was going to come to you next anyway, because as the one that did all the hard work in Santander, I was going to ask you. My favorite question is, but you don't have to answer this if you have something better to say. But my favorite question was, what was the biggest challenge you faced in driving out the breakthrough program, or what would you do differently, or what would you not do again? But if you don't want to answer that, you can speak about something else.
No, I will. I'll come back to that one, Ken. I'll mull it over. Well, there was something that I just wanted to add off the back of Lucas's examples, was what we've done with Santander Navigator. So Susan mentioned it in her presentation, because I think for us that is a really interesting subscription model that the bank has developed. But it's focused in purely on international trade. And it is aimed more at our larger corporate businesses. But I think what's interesting is, excuse me, they've taken an approach of the classic, there is a freemium model. So actually smaller businesses who are customers can dip their toe in and they can access some of the information that's available on the Navigator platform. And it is a standalone platform. So they're getting that taste. They're getting that sense of that carrot of the support that is there. And then there's two other subscription levels. And actually, if you're fully subscribing, what you're getting are heavily discounted services from all of the providers that have been curated on the Navigator platform. Now, I think it's really interesting. I think it's been a real challenge for the team in packaging that up in a way that is palatable to the market. We didn't start with a freemium version of it. We started with a fully paid subscription, but then the freemium has been introduced to get people in, to get people engaged with it. You can access, we've partnered up with an organisation to provide some export training material. You can get access to that. So the intention now is that we start to build up that relationship and we start to get those customers on that journey, and then they get so far, and then that subscription becomes almost essential to them, I guess. So I think it's another interesting alternative example, very, very different from what we've done with Breakthrough. Although I have often thought in the past, gosh, there's a model that we should look at, because actually what we've got are a lot of those support services in place already. So that was why I raised my hand. But to your point, Ken, remind me what you wanted me. What would we do differently?
Susan's always going to tell us all the good bits. I was going to ask you. I was going to say, well, what if you were starting out on this journey? Yeah. What if you were starting out on this journey again? What would you have done differently, or what were the things that were internal blockers that were really challenging?
I think a lot of the hearts and minds into why we would offer beyond banking, I think personally quite a lot of people have struggled with. Now, when I joined the bank, it was to run a very specific support project. It was an incubation space. We were providing completely free of charge office space, mentoring, training, access to an incredible network. We didn't charge a penny for it, and nor did you need to bank with us. And the number of people I spoke to who just could not get their head around it. Why are we doing this? And I came into banking from a very different business support background, where it was always just the natural thing. If you're working with SMEs, then you provide them with the help that they need to achieve their ambition. Because otherwise, we're in this game. The economy needs successful, growing businesses. So I think when I came into the bank, I was kind of taken aback by perhaps some of the reticence behind why we would provide beyond banking support.
Yeah.
Why would we offer something that isn't a tangible financial product or service? So we've had to do a little bit, I think, to be able to demonstrate just the impact that what we do has on those businesses. And that impact itself is actually quite difficult to demonstrate, that's quite difficult to bring to life because it doesn't happen overnight. It happens over, you know, if somebody goes on our mentoring program, it could be 3, 4, 5 years down the line before they see the true impact of having had that intervention and that support. So I think sometimes demonstrating the why can be quite difficult, I would say.
Yeah. No, that's that, you know, and how do you make a burning platform out of an intangible? You know, when it's intangible, intangible internally for a bank now, but maybe extremely tangible for an SME in terms of that vital support you give them at a certain life cycle. I think that's a cracking note to end on. I'd love to continue this discussion, and I was going to go back to Zubair, but I'm going to try and paraphrase what I was going to ask Zubair, which is, you know, when we set out on this journey with Very Park and we talked about building out that 5 maturity stages of SME banking and that journey from digital transformation to disruption, you know, the one of the things that I was very strong on was that we got to an actionable roadmap. So there may be many people on this call today thinking about, you know, well, this is all very interesting, but I'm still struggling with digital transformation and I don't know where I am and I don't know how to attack this. I really urge you to take down and to download the Very Park and Chorus report and read it and start thinking about, you know, what are the steps that you can take that will bring you on this journey. Plot where you are on that transformation roadmap, and then bring that to the content that we're bringing to you, and the offer that has been made here, and the opportunity to speak to other course members who may have done this already, maybe at a different stage to you, may be able to give you a learning that means that you don't make those mistakes into the future. It's been a super discussion this morning. David, if you wouldn't mind, just as we close, I'm going to bring it to just give you a snapshot of 2 upcoming events. On the 17th October, Bank Assurance Breakthrough, Fueling SME Banking Triumph. And something that we think is really important is that, you know, assurance is a really important service in an SME's toolkit in terms of how we provide that as part of their business service. So we're going to spend some time jointly with a number of our colleagues in the Bank Assurance Forum on the 17th of October. Again, that's online. And also on the 14th of November, performing SME lending amidst growing challenges. That's safe, smooth, and sustainable. We're going to get back to basics here and talk about driving credit and bringing credit to SME customers in a way that is very smooth for their journey, and is in a way that they want to consume that digital credit process. Other things going on, our next reInvent forum, which is in Dubai on the 11th of 12th of October, and we will be taking that as part of an SME community meetup. So revolutionizing banking experience with digital tools. So I think all of this is coming together very nicely as we roll into Q3 and roll into Q4. We're at the end of our time here today. I just want to thank Susan and Lynn, Zubair and Lucas for your great contribution and participation this morning. I've thoroughly enjoyed this session. Hopefully you've got some good takeaways from it, and good luck with your journey and your transformation journey. And you know where we are at Course and indeed our partners in Very Park if you want to have any of these conversations in a dialogue separately. Thanks very much, folks, and have a good day and take care.
Thank you. Thanks.
Thank you.
Bye.
Thank you. Bye-bye.
Bye-bye.
Thank you.